Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Cronemeyer, Operations Manager for Wickham Financial Group. Have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call again. If we look at the U.S. markets, and we'll have some economic numbers to go over, we saw the S&P and the Nasdaq both rose about 1.5%. The Russell 2000, that small cap area, that was up about 3.4%. And we did see all of the S&P 500 sectors in positive. Now, that was led by basic materials, up about 4%, and the technology sector gained about 2.5%. We did see Treasury yields rise with that strong employment report that came out. We did see the employment data, and what that was showing, we saw non-farm payrolls up about 147,000 in June. And the unemployment rate did drop to about 4.1%. Despite some headline strength, we still saw some private payroll declines and some hiring remaining soft. Now, if we look at the Federal Reserve, Chairman Powell signaled kind of a wait and see here. Still worried about some inflation risk with the tariffs, so on and so forth. So a little bit of a wait and see on their next rate cuts and by how much. So if we look at manufacturing and services, we saw the manufacturing remain pretty weak. Some input prices edged higher. We looked at the ISM Services PMI. Now that returned to expansionary, but the employment indices in both sectors did soften. Oil prices, crude oil rose about 3% after Iran halted cooperation with the UN nuclear watchdog area. And if we go overseas, if we look at the UK, the government bond prices dropped sharply after welfare cuts were scrapped, raising some concerns over some fiscal stability. We look at Europe, with inflation in June met expectations of about 2% and supported some case for another rate cut. China's manufacturing activity did decline for the third month, but at a slower pace. Now, looking at this week, it's pretty light overall, light week for some U.S. data. But we did have the White House tax and spending bill did get passed and signed into law. We're looking at some trade negotiations coming through with Vietnam, the EU, and on June 9th, we're looking at some tariffs freeze deadline pushed off from July 9th, to August 1st. If we look at some economic calendar, again, pretty light. Some key highlights will be with the FOMC meetings, meeting minutes on Wednesday. And some other data would be with small business sentiment, some consumer credit, and then we'll get some auction of treasuries for the 10 and 30. So we'll see what the appetite looks like for that. And going overseas, we'll have OPEC coming out, and they're announcing about a 548,000 barrel production increase for August. That's going to signal the fourth straight month of monthly hikes. For Australia, their central bank meeting, they're expected to probably cut rates by 25 basis points off of some weak retail sales and housing data. And over in Europe, we'll be looking at Germany's industrial production, EU retail sales, investor sentiment, UK GDP update. And then last but not least, over in China, we'll be looking at some trade balance inflation, some new loans that'll be coming out in June. Jeremy?
Gotcha, well, Graham. We always appreciate the information and expertise. And to our listeners, we do have our next set of retirement planning today classes coming up here in August, middle August. So if you're interested in that, you can go check out our website or give us a call here at the office, and we can give you more information on that if any of your friends and family might be interested in those. And also to our current clients, if you're interested in a quarterly review with Graham and the team here, then just give us a call here at the office or hit our calendar, and we'd be glad to get something set up for you. And we look forward to seeing you next week.
Take care.